My name is Steve Creedle. I'm the Senior Lending Officer for Benchmark Community Bank. We're just over the last year, we celebrated our 50th anniversary, and we just hit $1 billion in assets. So we've come a long ways in 50 years. So talk this morning is navigating your business loan. It's not as scary as you think. One of the things that I first want to talk about is exactly what a bank does. Simplistically, we buy money and we sell money. The money we buy is from checking accounts and savings accounts and things of that nature, and then we sell it to loan customers. And then the money that's the difference between what we buy and what we sell it at is how we give value to our shareholders and pay for the buildings and payroll expenses. So we are overseen by the Federal Reserve out of Richmond. And what we do is we have a lot of policies and procedures and things of that nature that we have to follow, because they want to make sure that we are making good loans that are going to be repaid, all the principal and interest due. So basically we can keep the doors open and keep serving our borrowers. What this is right here is a little list of things that you will need. So there's a difference between is your business new or is it an existing business? So if it's new, some of the things that we're going to need, whether you're new or whether you're existing business, is we want to find out financially about you. One thing that every bank is going to ask for is a personal financial statement. What that is a listing of what you own, your assets, versus what you owe, which is your liabilities. The difference between those two figures, hopefully it's a positive figure, is your net worth. And the larger your net worth is, the easier it is to bank. You've got more of a cushion to land on if something does go wrong with whatever the request is. We will be asking for personal tax returns and business tax returns. This basically shows us what your income has been over the last 1 to 3 years. I tell people that if you have a business or multiple businesses, we have to look at you, what I refer to as globally. So if you have a job but you also own another business, you've got money coming in from you personally. Let's say that goes into your left pocket. You have business money coming in from your business that you own that goes into your right pocket. It's still the same pair of pants. So we have to look at all the income that you have coming in. One of the questions I will ask if it's a new business is, and I don't know how many people are starting a new one or expanding or whatnot, but if you're starting a new business, one thing that we want to make sure of is asking if your current employment is going to continue. Like I mentioned before, we want to make sure that we are making good loans that'll get repaid. What we also don't want to do is we don't want to put people in a position where they have borrowed too much or are unable to pay the loans back. Some of the decision making that we have to do is dependent on is the income stable, how much debt is out there, and how much money do you have left over to live on. If you don't have enough money to live on, it may not be the best thing for us to do to say yes. And I've actually had people over the years that have had too much money, too much debt to begin with, and want to borrow to try to get their way out. And we've explained to them that you can't get out of a debt hole by getting a bigger shovel. And in your business plan, we want to make sure, and I think Sherry and their folks and others can help you put together a game plan and a business plan to say, this is my idea, this is how I think it's going to work, and be able to explain that to your banker. And whether it's a new business or an expansion of a business, the more you know about your business and the more that you can explain the intricate details of why you want to do what you do are going to give the banker a little more comfort in being able to help. So the next option is your business growing? Different options here, whether are you going to move into a larger location? Do you need to update or have new products and services, hire more staff? or you buying newer or more updated equipment. Like I said before, the in all of these options, the more that you know about your business and the more that your banker knows about your business, the easier it is going to be to, I guess, I convince the banker is a bad phrase, but to get the banker and you on the same page as to how you get from point A to point B, which is the loan closing. So if your business is expanding, we're going to ask for the exact same things. We're going to ask for the personal financial statement, the personal tax returns for the 1-3 years, business tax returns for 1 to 3 years. A new one, which is the next bullet point there, is a business debt schedule. What this is, the business debt schedule, some banks do not report to credit bureaus their business loans. So let's say your personal credit report shows your mortgage and maybe an equity line and a car note and a credit card or two. If you have a business, you may have a mortgage on that business property. That loan may or may not show up on your personal credit report. So what we do is we ask the borrowers to provide us with a business debt schedule. That goes back to what I was talking about a little bit earlier with the kind of same pair of pants mentality. We're going to see your personal debts on the credit report, and then the business debt schedule may not include those. So we want to make sure we're looking at all the income that's coming in, as well as all of the debts that are already, the debts are your income already spoken for that you've got to send out to somebody else. And then the last little bullet point there would still be your business plan is I'm getting from point A to where I am now to point B, which is where I want to be. What we will need to order, we're going to look at your personal credit report. I don't know if everybody that comes to a bank to borrow money knows what their credit report looks like before they get there. And I didn't put this in the slide, and I thought about it yesterday afternoon. I wish I would have. Annualcreditreport.com is a free website. I believe the government started that maybe back in the Bush administration. I can't remember exactly what it is, but annualcreditreport.com, you can go there, I believe, twice a year to pull your credit report. They're going to ask you to sign up for all sorts of stuff. You don't have to buy anything in order to see it. But what it will do is it will show you your credit history for all 3 credit bureaus, which are Equifax, TransUnion, and Experian. The better credit score you have, of course, the easier it is to lend you money because it shows you your history with how you've handled finances. And appraisals, if needed, if you are using buying real estate or using real estate as collateral for our loan, we will need to make sure that we get a disinterested third party to give us a value on that real estate. We can look at values for equipment and vehicles, but I would tell you that if you're looking to buy something, your banker is going to ask you how much money are you going to put down. What we refer to that as kind of skin in the game. We want to be lenders and not owners. So not a lot of times will the banker be able to lend you 100% of the purchase price or whatever business equipment or real estate that you're looking for. That real estate and equipment and vehicles is basically our kind of secondary source of repayment. So we want to make sure that that value is there in case we need it. And I know I didn't have a lot of time to wrap up the banking side on how a business loan or the credit piece work. But I would say there's 2 different ways to look at how we can help or how someone can help for your business. If the bank can see that there is existing money coming in and income, and I will tell you that bankers are a whole lot better looking backward than we are looking forward. That's why you see the tax returns and the credit reports and the debt schedules and everything. We're very good at looking backwards to try to look to see what the future will hold. Some of you that are starting new businesses, that vision of seeing where is it going to be that may be more difficult for bankers to see, because like I said, we're better at looking backwards. So a bank is going to have will charge interest for that, and we will be a lender. If a lender is not an option, you may need an investor. Kind of like the bank versus Shark Tank. That's the kind of the easiest way I can think about it there, where they inject capital or money into your business, but they take a percentage of that business. As a bank, we're not going to take a percentage of the business. We're looking for the interest piece.